Side pointer is intended for all you side giggers, side hustlers, or anybody with self-employment income in 2022. As you likely know by now, there's a new rule that requires all the electronic payment platforms, Venmo, PayPal, Apple Pay, to report to the IRS any amounts over $600. So you're going to get a lot more information this year on your side gig income, and so is the IRS. Here are my top 5 expenses that you can use to offset some of that income and pay less taxes. Item number 1, if you use your car related to your business, and this is not just rideshare people, but really any taxpayer that has a business that uses their automobile for delivery, for business meetings, to travel, to get to wherever they need to get to do their business, you can take a tax deduction for automobile expenses. You get a cents per mile deduction of 62.5 cents for the second half of the year, a little bit less for the first half because they just raised it for gas, or you can take your business mile percentage overall, business miles to total miles, times your total automobile expenses, gasoline, oil, insurance. So cents per mile method or business percentage of your total expenses. A little bit more record keeping, but it might be bigger. Look at both. The second thing you can take as a deduction is a home office deduction. If you have a side gig business and you work out of your home in a dedicated space, it's not a new deduction, but it's one that's often overlooked. You can have a tax deduction related to your office, your home office. Now, there are some limitations and restrictions and other requirements, but the long story short is if you have a dedicated space, not the kitchen table and not the dining room, then you can either do the simple method, $5 per square foot up to a limit, or like the automobile, you can take your business area percentage to your total house times your actual expenses, your mortgage payment, rent, insurance, maintenance, utilities, those costs times the business percentage, tax deduction for your home office on your tax return. Don't look past the home office. Third thing, many people contribute to a retirement plan. Some people that employee companies do a 401k, but self-employed people can set up a simplified employee pension plan or their own 401k plan, or even an IRA, a traditional IRA. But if you put money in a retirement savings plan, not in a coffee can out in the yard, not in a mattress under the bed or in a safety deposit box, but a legitimate retirement account, you get 100% tax deduction for those contributions, again, up to a pretty high limit. Also, those earnings are tax-free. So if your stock account or your mutual fund goes up, you don't pay taxes on that till you pull it out for retirement, and that's a long time from now. So don't look past contributions to retirement plan. Nice tax break there, and many people are saving anyway, so don't look past that one. The next one you need to look at is the easiest of all of them. If you buy assets related to your business, think your computer or your printer or whatever assets you consume in your side gig business, you get a deduction for 100% of the business assets that you use or consume. All you need to do is keep record of it, that you used it for business and the amount, like a copy of the receipt, and you can take that tax deduction on your tax return too, and that's a nice one, and those add up very quickly. So don't look past business assets. The fifth and final one is related to a law that's been in place for a long time. It's related to your health insurance. Everybody still has to have health insurance under the law. And so if you have health insurance that you pay for out of your pocket for your self-employment activity and your family's covered or your dependents are covered, you get a 100% tax break for self-employed health insurance coverage. Now, there's some rules and requirements. If you can get insurance through an employer or a spouse's employer, you might be limited. But if you buy self-employed health insurance, 100% tax break. These are by no means all of the deductions. And I would say if you're in business for the first time or you've been in business for a long time, you've not had guidance, you probably ought to seek it out because it's never been more important. So find out all the tax breaks, tax deductions, and income offsets that you need from a qualified tax pro. And we at Jackson Hewitt love to help you on these. So please come see us. I'll finish by saying from all of us at the Tax Talk Live Poolside Pointers Desk, we appreciate your time today and look forward to seeing you on a future segment.